Hi everyone, welcome. In this video, I'm going to explain two very important trading concepts in a very simple and practical way: arbitrage and hedging. We will not start with technical words or charts. We'll start with daily life examples because once the concept is clear in your mind, trading examples become much easier. And after that, we'll connect everything to gold arbitrage using gold spot versus gold futures on the same broker. Arbitrage is basically a price difference opportunity. When the same thing is available at two different prices and you can buy cheaper and sell higher, the difference becomes your potential profit. The most important thing to understand is this: arbitrage is not about predicting the future. It is not like gold will go up or gold will go down. Arbitrage is about one thing only: a gap between two prices. If let's take a simple daily life example. Imagine there are two nearby markets, market A and market B. Apple price in market A is rupees 100 per kilogram and apple price in market B is rupees 120 per kilogram. Now, if you buy from market A at rupees 100 and sell in market B at rupees 120, the gap is rupees 20. But here's where real arbitrage thinking starts because you also have costs: transport cost, time cost, packaging, maybe commission, and sometimes even spoilage risk. So arbitrage is profitable only when the gap is bigger than the total cost. If your total cost is rupees 5, you still earn rupees 15. If your total cost is rupees 25, you earn nothing and you can even lose. So arbitrage is not magic. Arbitrage is a gap capture business and it works only when gap is greater than costs. Now, who usually does arbitrage? In real markets, arbitrage is done by professional traders, institutions, market makers, and systematic traders. Because gaps can appear for a short time and close quickly. Gaps appear because markets are not perfect all the time. Even if two prices are related, they can temporarily go out of sync due to heavy buying or selling pressure, liquidity differences, news volatility, and fast market moves. So, arbitrage traders don't focus on predicting direction. They watch the gap and try to capture it only when it is attractive and tradable. Now, let's talk about hedging. Hedging means protecting yourself from risk by taking an opposite position that balances your exposure. Think of hedging as a safety system. You may still earn profit, but the main goal is to reduce damage if something moves against you. Here's a daily life example. Imagine you are a shopkeeper who sells apples. You are buying apples today, but you are worried that tomorrow apple price might drop. If price drops, your inventory value drops and you face loss. So you can protect yourself by locking a selling price with a buyer. For example, you agree that tomorrow you will sell at rupees 110 per kilogram no matter what. Now, even if tomorrow the price becomes rupees 90, you are protected. You may not get the maximum profit, but you reduce the risk of a big unexpected loss. That is hedging. Another simple example is when a business locks its future fuel costs using a contract so it doesn't suffer from sudden price spikes. They are not gambling, they are controlling uncertainty. So the simple definition is hedging is risk control by taking an opposite position. Now, here is the important bridge. In trading, a lot of arbitrage setups are also hedge setups. Why? Because arbitrage is usually done using two related instruments. And to capture the gap, we often take a buy on one side and a sell on the other side. This creates a hedge like structure. So instead of being fully dependent on market direction, the trader is more focused on gap movement. That's why arbitrage is often called a pair trade or a hedge trade. It doesn't mean there is no risk, but it means the strategy is designed to reduce direct directional exposure. Now we come to the trading example, gold arbitrage. On the same broker, you will see two related instruments. First is gold spot, usually shown as XIUSD. This is the live price of gold right now. Second is a gold futures contract shown with a contract name like gold.apr, gold.jun, or similar depending on expiry. Both represent gold, so they move together most of the time, but they are not always the same price. And this difference is normal. Futures price can differ from spot price because it includes time-related factors and market conditions like time to expiry, cost of carry, demand and supply, liquidity, and volatility. So the gap between spot and futures can expand and contract. This gap is what arbitrage traders focus on. Let's take a simple example on the same broker. Suppose right now XRUSD spot is 2300.00 and at the same time the gold futures contract is 2316.00. So futures is higher by 16.00. This is the gap. An arbitrage trader does not say gold will go up so I should buy or gold will go down so I should sell. Instead the trader asks, is this gap tradable? Is the gap big enough? Can I capture part of this gap if it comes down? That's arbitrage thinking. Now, if futures is expensive and spot is cheaper, the typical trade structure is buy spot XAUDUSD and sell the gold futures contract. You are buying the cheaper instrument and selling the expensive one. Now, what happens if gold price moves up? Spot goes up and futures also goes up. What happens if gold price moves down? Spot goes down and futures also goes down. So, your main focus is not direction. Your main focus is will the gap reduce? Profit comes when the gap reduces. For example, you enter when the gap is 16.5 and you decide to exit when the gap becomes 15.3. So the gap reduced by 1.2 and that is what you captured, subject to lot size, broker costs, spreads, and execution. But the concept stays the same. Enter at a wider gap and exit at a smaller gap. This is exactly like the Apple example. Buy cheaper and sell higher, only here cheap and expensive is not market A and B, it is spot and futures inside the same broker. Now, it's very important to understand that even though arbitrage is hedged, it is not risk-free. There are real risks like spread widening, slippage, and execution delay. Some contract change. Future symbol changes monthly. You must update the contract symbol in your settings.mes. One leg executes and the other leg executes late. Also, the gap can widen more before it closes. Future symbols also change monthly, so you must update the contract symbol when expiry changes. Broker conditions, margin rules, and liquidity can also impact the strategy. That's why professional arbitrage always uses controlled lot size, limited number of open pairs, a clear entry gap, and a clear exit gap, and strict discipline to avoid overtrading. To summarize, arbitrage means capturing a price gap between two related prices. Hedging means risk control by balancing exposure. In gold trading on the same broker, we compare gold spot XRUSD and the gold futures contract. We watch the gap, and when the gap becomes tradable, we build a hedge pair trade, buy the cheaper side and sell the expensive side, and close when the gap reduces to our target. This strategy is not based on predicting whether gold will go up or down. It is based on managing the gap with rules and discipline. Thank you for watching. If you want the next step, how to apply the exact rules, set entry and exit gaps, and follow best practices, please connect with our team for guided training.
So now I will tell you how to set up the MT5, how to set up this bot file, and how to trade exactly in this market. So this is our website. I hope you are successfully registered in the website. You just have to click on the sign up button, then you have to create the account. You will get an email verification, and after the verification you will get your MT5 ID, password, server name, and our bot file in your email. So you just have to log in on your Equal dashboard. Once you log in on your Equal dashboard, you have to hit on dashboard and you will see this interface. In this interface, if you click on client dashboard, this will be your dashboard. So now from this dashboard, we are generating our bot file, and in this way, I will help you to set up the account. You just have to click on create 7-day practice account. When you click on this button on the mail, you will receive the details of your MT5 and bot file. I have created the account and you can see I have received the email which saying this is my account ID, main password, investor password, server name, and I can download my HRX file from here. I can just download the file. It will be downloaded in my system, and this is my MT5 details as well. So now from this onward, I will help you to set up the account of our bot. So to set up the account, you have to have your own VPS. For the demo file, for the 7-day trial, you don't need to have the VPS. If you have a VPS, then it will help you to run the bot fast. The order will be executed so fast. So I am doing my VPS login, remote desktop connection. If you don't have a VPS, you can purchase your own VPS, else you can also contact our team. I am just creating the account. I am just going VPS login, and then I will help you to set up the account. Now, so in this way, there will be a MT5 MetaTrader 5 that will be open. Now in this MT5, I will help you to log in your account. I will help you to set up the bot. To log in the MT5, you have to click on the file. On file, you have to click on open an account, and in open an account, you have to search Crib Market Mauritius. Once you search Crib Market Mauritius, the broker name will be here. You have to click on next. On next, you have to click on connect with the existing trade account. Then I will add my MT5 ID. My MT5 ID is this one which I received on my email. I will go here, I will submit here, then I will put my investor password here. There is a small change in the video. I have said investor password, but you have to use main password here. So use your MT5 and main password to log in and create the account, and my account will be live. Okay, so now you can see my MT5 is login. Here you can see in the navigator my account ID, my name. So now the MT5 is login, but now we have to add our bot file here. So now I will help you how to add the bot file here. So to add the bot file, you have to click on again file, and then you have to click on open data folder. After that, you have to click on my QL5, and after that you have to click on expert, and here you need to paste the bot file which we have shared on your email. So now it's already in my system, so I will go to my files, I will go to downloads, and I will copy this file. I will paste this file where I will go in my VPS, I will paste this file in my expert. So you have to click on file, open data folder, then MQL5, then experts, and you have to just copy your file here. And the file name last digits are 9938. Once you copy, the file will be added here. To check the file in the expert advisory, you just have to refresh here. In the expert advisory, you can just refresh. Once you refresh, you will be able to see your file here. Where is my 9938 file? My 9938 file is here, means we have successfully registered in the MT5 account. We have also done with our bot file installation, and now we have to start on our bot. So now how to use the bot? Now as you know, our bot works on two instruments, that is spot and future. This is the spot contract, this is the future contract. To install the file, you just have to drag the future contract here on the charts. Once you drag the future contract here on the charts, after that you have to drag the bot file on this future contract. I will select my bot file, I will drag my bot file on this future contract, and my bot will be here. So now your MT5 is login. Now we have also added the bot file, hrx file, that is our this file, and now we have to start the algo trading. Before we start the algo trading, what you need to do? You need to set up some rules. Okay, first of all, your algo will be off, so you have to on the algo. But before that, we will set up the rules. So you have to click here in the future contract chart. In the hrx bot file, you have to double click here, and once you double click here, this will be your trading panel. So in common, you have to check this checkbox, allow algo trading. Then you have to go to input, and you have to do some mandatory changes. So it can be different in different account, so please make sure that you are following the step. Here in the open direction, your preset will be buy, but you have to do sell. Okay, you have to keep compulsory sale. Okay, in symbol 1, symbol 2, first you need to add your future contract name. It will be default something different name, but you have to add your current contract future contract name. So you have to check from here. Here you will see the symbol of future contract and gold contract. So our future contract name is gold dot apr26. So you have to put it as it is. Okay, gold dot apr.26, and symbol 2 should be compulsory your spot contract, that is XAU USD. There should be no comma, no full stop after XAU USD, and account size is should be 0.01 only, as you are getting the account of $1,000 demo account. So play with the account size, go with the rule, don't over trade. So go with 0.0 lot size, and below that your default will be symbol 1. So always you have to do here symbol 2, symbol 2 and symbol 2. So these are compulsory rule that you are setting, and best practices, it should be 0 0 0. Every trade should be 0, every pair should be 0. Okay, so once you do this, you have to hit on OK, and after that you have to start your algo trading. You have to click here, you have to start your algo trading. Now you can see automated trading is enabled. You will not see the difference if you drag this downside, so it will be hide. So to see the difference between the spot and future, open and close price, you have to drag this window to upper side, and then you will be able to see the difference open and difference close as well, and here you can place the trade accordingly. So now how to trade exactly in the market, I will give you one example, and for more details you can connect with the team for the proper training. So the current gap is 16, that is open price, and 16.95 close price. So now I want to execute the trade. So to execute the trade, you have to click again in the trading panel. You will see here number of trade. I am going to enter my first arbitrage pair. So to have the first arbitrage pair, I will add here 1. So if I am adding number of pair 1, means my one arbitrage trade will be executed, means one buy and one sell, one spot buy, one future sell. Okay, so there will be a hedge trade in the market. So how to put the difference to trade? To put the difference to trade, you have to take the reference from the current price, current open price of the market. That is how much? 16.03. So always try to take the price above the open price. So what I will put? I will put 16.5 or 16.6 or 16.7. So I want to take the trade whenever the market is at 17.5. Now it's at 16.4. Whenever the market will be at 17.5, I will execute my trade. Okay, and how much profit I need to take, and I will enter the cut point here. So to have the cut point, you have to take the reference from the difference close, that is 17.9. So I will always keep the cut price below this close price, that will 16.3. So as you can see the difference between two, I am capturing the gap of around 1.2. So always the best practice is to capture the gap of above 1.1, 1.2, 1.3, 1.4, 1.5 and so on. During the news time, you can even capture the gap of $2, $3, $4. Okay, New York session, London session, Sydney session, whenever there is a news in the market, whenever there is a fluctuation in market will go above and take all the trades in the market, and it will cut immediately. So your work is to see the market, identify the gap, and execute the trade. Bot will automatically execute the trade and cut the trade. Okay, so what I will do, I will add one more pair here, and now I will say whenever the market is at 17.7, execute my trade, and whenever the cut point is at 16.3, my trade should be closed. So always keep the cut price same, and you can change the trade price. You can try to capture more and more gap. In set 1, in pair 1, I am trying to capture the gap of 1.2. In the set 1, pair 1, I am trying to capture the gap of 1.4, right? 1.1.4, 1.5. So in this way, you can execute the trade. Don't overtrade. Go with only 3 or 4 number of pair if your account size is $1,000 and the lot size should be 0.01. So I will hit OK. So my trade will be in the market. Now here you can see pair 0, 0 by 1, pair 1, 1, 0 by 1. So it means the market is not at 17.5. Whenever the market is at 17.5, because the current market is at 16.3, so whenever the spike will be there of 17.5 and 17.7, the trade will be executed, and the number of pair here, it will be 1 by 1, 1 by 1. Means here in the trade section you can find your trade. Okay, you can find one pair of set 1, another one pair of set 0. Okay, so there will be 4 trades in the market because we have done 2 pairs, means one pair, second pair, it will be 2 by 2 sale. Okay, here you can see your equity. Once the market is at 17.5 or 17.7, the trade will be executed, and whenever the trade will be cut, it will again be 0 by 1. Then you can add more and more trades. So for more practice, you can just connect with the team. Our team will help you to set up more rules, understand more about it, and start doing trading. Once the free trial is over for 7 days, then you have an option to go with our funded account, or you can even start the trading with your own capital. After the demo, if you want to go with funded account, you can just contact the team, or from the Equivault portal you can directly sign up to our that funded account of $1,000 and $3,000. And if you want to get your own funds into the market, then also you can go ahead with that and you can start your own trading. This bot is magical. Try doing it yourself, try to capture the gap yourself, and you will be amazed to see how this bot performs. So for more details, if you have any queries in setup or anything, you can just contact the team or the concerned people. They will help you with everything. Thank you.